Good evening, everybody. A nice summer shower evening here in Pittsburgh. Been a steady rain. So, oops, can everybody hear me all right? Okay, good. All right, so we're going to kind of go back a little bit toward the basics of adding all the probabilities that are going to improve, or adding all the facets that are going to improve the probabilities that the candlestick reversal signal trend is getting additional confirmation. And that is basically with moving averages, and that kind of helps put all the probabilities in alignment. So if you kind of look at candlesticks on a basis that you're still, the first thing you're looking for is the signals, the patterns, where are the stochastics, and where are things that everybody else is watching, trend lines, and especially the moving averages. Now we've got on our charts the 200-day, the 200-day simple, the 50-day simple, the 34 exponential, and the 8 exponential, which we call the T-line. So we've got the 200 and the 50 simple on our charts. And why do we have those on there? Because every major money manager around the world, and practically probably every trader around the world, has the 50 and the 200-day moving average on their charts. So a lot of people say, well, isn't the exponential a little bit better? We're not using the moving averages to make our decisions with candlestick signals. We're using the moving averages to see what everybody else is doing based upon their decisions at their indicators, which are the moving averages. So very simple. On our charts, we have the red line, the simple day 200, the 50 simple moving average. Back we had the 20, but now we have the 34. But here's the most important one, the T-line. And here's why you have the T-line on your chart. Because if the candlestick signals are the graphic depiction of what's going on in investor sentiment, and if you just kind of use the simple rule that prices do not move based upon fundamentals, prices move based upon the perception of fundamentals, that investor sentiment is what moves prices. Now, if you add the T-line, which acts like a natural support and resistance level of human nature, you combine those two, and you've got a very simple T-line rule. That if you see a candlestick buy signal and a close above the T-line, you stay long until you see a candlestick sell signal and a close back below the T-line. Conversely, if you see a candlestick sell signal and a close below the T-line, you can stay short until you see a candlestick buy signal and a close back up above the T-line. This works on your 1-minute chart, 3-minute, 5-minute, 10-minute, hourly, as well as does on your weekly, daily, monthly. It works on all time frames. So again, with that, the T-line rule, you've got truisms. But the further away you move from the T-line, because it acts like a natural support and resistance level of human nature, the higher the probability it's going to come back and test it. What does that mean to us? That means the further away you move from the T-line, the reversal signals become much more relevant, because that's where you're likely to be heading back to that 8 exponential moving average. So we use the major moving averages to show exactly what's happening in investor sentiment. We have a much more clear analysis of what's going on in investor sentiment based upon the signals. If we see a kind of reversal signal, a small kicker type signal right at the 50, we know immediately what investor sentiment was doing at those levels. That allows us to come out of long positions faster and get into short positions faster. So the moving averages will usually present a high probability situation. That if you see every time a trend moves back to the 50 and they're buying, that's exactly what you can assume. That every time it comes back to the 50, they're buying. We can see much more clearly what type of signals are occurring at those levels. So moving averages have truisms. And basically, one of them is, if a moving average support is breached, they'll usually come back up and test it to see if it's going to act as resistance. That was kind of illustrated right here. They came up through a resistance level and pulled back to see if it's going to act as support. Or when they came up here and failed, they'll come back up and see if it's going to act as resistance. Then when they go through, they usually come back to test it to see if that resistance level is now going to act as support. Now, we have the advantage again with candlestick analysis that the visuals tell us exactly what they're doing when they pull back. In this case, it was a little doji harami telling us the selling had stopped. Now, if we see buying, we know exactly what everybody's decision was. They were waiting to see if it was going to act as support. We're not buying up here or up here. We're buying right in here because that tells us we know exactly what's happened at that level. That also on the downside is what we call blue ice failure. If the 50 is acting as a support and they fall through the ice, they'll come up and see if it's they can find the hole they fell through. If they fail, which means they drowned, they're going to the bottom of the pond. Basically a bearish J-hook pattern, like our Bobble pattern on the opposite side. It's a bearish pattern, blue ice failure. So also using the moving averages allow us to add credibility or add 2+2 to our analysis. If this is a fry pan bottom and we can see that it breaks out through a resistance level, we know that's confirming our fry pan bottom. We see a bigger fry pan bottom and they're breaking out through the 200, right where that fry pan bottom starts. That's additional confirmation that the bulls are taking control. Now, why is that relevant when we're looking at a pattern to see it also breaking out at a major moving average? Because more than likely, if you're not a candlestick investor, you're not trading this. You're watching to see if they're going to come back up through the 50-day moving average, or I'm sorry, the 200-day moving average. If they do, that says, oh, they're going to stay up. I'm going to start buying again. Well, we could be buying down in here, knowing exactly what should be happening on a fry pan bottom breakout and what will likely happen at that breakout level if it also coincides with a major moving average. Just gives us a little bit more insight as to when to move quickly. Do you have any insight on the likelihood of a retest of a moving average after a Bobble breakout versus when a price goes through the moving average the first time? No, but you can visually see what's happening based upon the type of signals that occur once you have a Bobble breakout, whether it's going to continue the J-hook pattern, or if you see kind of indecisive sell signals, then you can kind of conclude, all right, let's come back out and see if they're going to come back down and test that moving average as a support level. So we can observe the obvious. We can see when they fail at a 50 because of sell signals, fail at the 50 because of sell signals. If we're in a downtrend and we see a bounce, what causes a major reversal? Obviously a big uptrend. But if we're in a downtrend and we see a bounce, and there's our shooting star signal in the overbought area, right smack dab on the 50, what can we conclude? That they're still selling. This downtrend is still in progress. The 50 is still acting as resistance. When you look at a fry pan bottom on the breakout, there's oft. I hate those offs. There's often been some movement already. If there's an earlier place to recognize the chart, yeah, but that's a whole different story, Jake, of where you want to buy a fry pan bottom. I'll see if I can come up with another one here. I'm sure I will. So moving averages act like magnets. Why is that? Because if you're a major money manager, well, I can give you an example right here, Jake. Where would you buy this fry pan bottom? You probably wouldn't. And there's nothing in here. But what do we know about a fry pan bottom? We know that they're going to break out when the stochastics are already in the overbought area. So why are we interested in buying something that's in the overbought area? Because we know what the result is coming out of a fry pan bottom, that there's going to be a big price move. All right, so if you're an institution or you're a hedge fund or a mutual fund manager, and you go into committee and say, all right, I think we should be buying this stock, and they say, all right, go ahead and start adding when you think it's appropriate. And it's drifting, drifting, drifting. Where do you think most people are going to wait to see if this is going to act as support? When it gets back down here to the 50-day moving average. What do we see when it gets to the 50-day moving average? Well, obviously there's our morning star signal. That tells us that's where everybody decided they were buying, so it becomes a very safe trade. So that's why the moving averages act like magnets, because people were waiting to see if it's going to support, so they're not buying, they're not buying, not buying. Now it gets here and it looks like they can start buying. We can see immediately that's where they're coming in. So anytime we see a pattern, again, there's your blue ice failure. The Dow fell through, came up, failed at the 50. Where's the next target? Down here. Down here there was buy signals, came up through the T line. Where do you think your first target was? Here, went through, up here. Second target, observe the obvious. It just touched the 50 and did a bearish harami with stochastics rolling over. What did kind of immediately tell you? They probably weren't going through the 50. Their downtrend is still in progress. And where was that progress likely to go to? Well, we've got the other indicators that we can use. So we see a sell signal reversal, failure at the 50, a close below the T line, followed by a bearish doji sandwich. Where's your next likely target? Probably someplace everybody else is watching. A trend line support level. But the fact that they failed right smack dab at a level that everybody was watching, not that they failed, we could see that they failed because they did a doji in the overbought condition. That told us, use the doji rule. If they're selling it off tomorrow, the doji rule says they're going to be moving in the direction how they traded after the doji. That tells us if we were long, we're taking profits and considering going the other way. So if I've got a pattern set up, like a fry pan bottom, and I can conclude that they're not letting it go below the 50, that just adds a little bit more credibility. When I say credibility, that's the convergence analysis. That the more aspects that we can put into our visual analysis, that the bulls are definitely in control, the higher the probability we're in the right place at the right time. Yep, we did that one. Let's go on. So this is, again, a very simple observation, knowing what signals we're looking for. Look at the big morning star signal right smack dab on the 200. where do you think everybody was watching to see if this was going to act as support? Right here at the 200. What do we know about the doji? We know it's going to move in the direction how they open after a doji. So if we see that they did a doji in the oversold area, right smack dab on the 200, what do we want to see what investor sentiment is doing the next day? Well, if we wake up and it shows the pre-market futures are going to have the Dow opening up 240 points, we know we could be buying immediately because that's exactly the information that gives us the head start. Dow looks like bearish J-hook. Oh, up here? Yeah, that's so once it closed below the T line, and yeah, that's a whole different story. We're kind of using this moving average. So if that's a bearish pattern, where do you think the next likely target is going to be? What everybody is watching to see if they're going to bring it back to the 50. So observe the obvious. Which direction is the 10-minute crude oil chart moving? It's in a downtrend. But then it bounced right here. So what advantage do we have? We can see we had a shooting star doji right smack dab on the 10-minute T line. Now, is that relevant? Looks like it was relevant up here. They fell through. They couldn't get back up through. So it's still in a downtrend. This is not rocket science. This is just analyzing what type of signals are occurring at levels that everybody else is probably watching. So if I've got something like this, up in the overbought area, evening star signal, right smack dab at the 200, closing below the T line. If I'm long Apple, what am I doing right here? I'm closing it out and or looking to start going short. Not because of this alone, but the fact that where did it occur? Right there at a level that everybody was watching. If I see a doji failing at this level and they're gapping it down, what's it telling me about the 200? That's where everybody was deciding to sell and getting out of that position. NASDAQ comes right back to the 50, has a wedge type pattern, and they start buying. What can we assume immediately? They were buying as soon as they saw it supporting on the 50. Same scenario. If you see them supporting right on the 50 and are gapping it up, what's that tell you what they were thinking about when it got to the 50? I mean, they meaning the whole market in general, or the big buying or the big selling. That's where they started back in. So this, again, is just, if they're coming up, they move away from a support level, they pull back, we see a bullish harami right smack dab on the 50 and it opens positive. What can we conclude immediately? They were supporting on the 50 and ready to buy. Why do we want to be buying here? Because everybody that was watching to see if it was going to support at the 50, start seeing that they're going to support, I'm going to start buying. There's some methodologies that say, yep, we're going to wait until 3 good days or 6% or something else. It has absolutely nothing to do with the market move. We can see this is where the sellers were told, or the bullish harami told us the selling had stopped, and the next day told us they were anxiously buying because they could see that it was supporting at the 50. Now, if there wasn't a 50 here, it would still be a relevant signal, kind of a J-hook type pattern, but the fact that you can see that it was occurring at a level that everybody is watching makes it that much more important. Pull back, bullish harami right smack dab on the 50, gapping up. That becomes a very high probability trade setup because everybody's seeing it supporting here. They were buying, there was consolidation right back to the 50. They're all watching to see if the 50 is going to hold, and when it does, they're back in buying again. We just happen to be able to recognize that and get a jump on everybody I mean, we could be buying right here as soon as we see it gap up, because what do we know about a Harami gap up? Not only has the selling stopped, but if they're gapping it up, that tells us that we're in the next uptrend. Just simple logic. If we see candlestick buy signals at a level everybody else is watching, we can get ready to be buying immediately, being in ahead of everybody. Which, one, if you're buying stocks, it's good. If you're buying options, it gives you that much more zing to your buying. A Bobble breakout is one of our strongest patterns because we can see exactly where they were taking profits at the 50 and then coming back up through that resistance level, telling us the buying was back in. Now, why is that more relevant? If you took the 50 out, what type of pattern do you have? You have a J-hook pattern, which we know works very well. Why is it more relevant when the 50 is there? Because it failed at a level everybody was watching, and it broke out to a level that everybody was watching. We were just happened to be a little bit more prepared, knowing that if it came back up through that level, we have a J-hook pattern, but more defined by the Bobble. No, DD, it occurs at any level that tells you people can see there's a resistance, and then that resistance level, they took profits at a resistance. This could be the 200. This could have been a recent high. Just anything that tells us that at a level everybody else is watching. In this case, it just happened to be the 50. There's kind of your Bobble breakout. They came up through the 200. They pulled back to the 200 in the T-line and then went back up through. So what do we know? If we took out that 50, we know we've got a J-hook pattern. The fact that we could see the 50 was a level that everybody else was watching makes it that much more, when I say powerful, or more indicative of what everybody's doing. So anytime we see a wedge or some sort of trading that tells us the 50 is acting as support, and then we see a buy signal breaking out through the resistance level, we can be buying here. A lot of people say, well, shoot, what happens if we buy and as soon as we buy, it immediately turns back down again? That's going to happen. But the probabilities are that if you see a buy signal, it's not because it was a candlestick buy signal because of candlestick it's because the candlestick signal was illustrating what everybody else's decision was. It's just showing us, so that's where the buying is occurring, giving you a high probability trade setup. So the crunch is the same as a Bobble, but without the initial failure at the average. Yes, a crunch is just an uptrending move going into a resistance level and pushing through that resistance level. A Bobble is where they usually came up and touched the resistance level, pulled back, and then curled back up again. Would you consider a breakout of a J-hook pattern a Bobble breakout too? No. No, it's the term Bobble breakout is the fact that we do have a J-hook pattern, but it's more defined because we can see where the resistance was and where the breakout was. So there's no difference. It's just the Bobble is much more clearly defined of where they're selling and where they're buying back. But the difference between a J-hook pattern and a Bobble pattern is when a J-hook pattern breaks out, we can see it as a J-hook pattern. When a Bobble breakout occurs, we can see it as a J-hook pattern, but everybody else is watching the fact that it's breaking out through the 50 or the 200 or whatever the resistance level was, which adds more credibility to that J-hook pattern. A fry pan bottom. Back to your question, Jake. Where would you buy in here? And it's moved up some, but where was the big move? It's when it broke out. That's what we're looking for. And look where this broke out. Look where the fry pan bottom started. Look where it broke out with kind of a little doji sandwich. So you're already up here in the overbought area. Remember the rules of stochastics, that you're usually buying a signal in the oversold area. You're usually buying a pattern breakout in the overbought area. Anytime you see it drifting back, and then you can see the buy signals right on the support level. If there's came up through the 50, pulled back and used the 50 as support, where's your next logical target? At the next moving average that everybody is watching. Morning star signal, right smack dab off the 50. Positive trading. What did the positive trading tell us the next day? It was confirming our morning star signal, and it was telling us the T-line was not acting as resistance, and then the additional information we can see is that the morning star signal occurred right here off the 50-day moving average. The more pieces of evidence that we can see confirming the signals, the patterns, everything we're looking for as far as confirmation and candlestick signals, the better off we are. So if I've got one thing confirming, that's good. If I got two things that are confirming, that's better. If I've got three things that are confirming, that's even better yet. Another morning star signal, right smack dab off the 50. So essentially, all we're looking for is things that are improving the probabilities of being in the right place at the right time. Isn't that hanging man also an evening star? I don't know. That's a hanging man evening star signal, yes. All right, so observe the obvious. Got a candlestick sell signal in the overbought area. What's it telling you about the 200? They're not going through. Ellie, it doesn't really matter. What we're really interested in is we're looking at the chart right here. You can go back to whatever is comfortable. My first criteria on how big do I make the chart or how small do I make the chart is allowing my poor eyesight to see exactly what's happening right here. Now, if I see a sell signal right here, I want to see what else was going on here. I'll make the chart a little bit bigger and see if we're in a downtrend, bounce, downtrend. But that question isn't relevant in the sense that it takes a matter of seconds to go make this go out to 3 months, 4 months, 5 months, and takes a matter of seconds to bring it right back again. So this is also, somebody was asking the other day, how do we tell where the targets are? We're using levels that we know everybody else is probably watching. So if I see a sell signal, left-right combo, followed by a bearish doji sandwich, where's my next likely target at a level that everybody else is watching? Another morning star signal, right smack dab off the 50. Stochastics coming up. That tells me I got a much better prospect of buying. So what really creates these reversals is nothing more than human emotions. Anytime we can see a pattern setup and it's right at a resistance level that everybody else is watching, what do we expect coming out of a fry pan bottom? A big breakout. And what makes it more relevant? They did the breakout right here at the 50-day moving average. Same scenario on the downside. The reason we shorted AI was you had a bearish flutter kicker, and then it gapped down below the 50. What did that tell us about the 50? Strong sell signal. The 50 was not going to act as support. What are we expecting after that? Whoops, lost it. We're expecting more downside because of the force. And where do we think this one could possibly go? Probably back down to test this level. So use the information that the chart is giving you. There was a sell signal on Louisiana Pacific. You could have been short until the left-right combo might have covered the short in here. But then look what happened again. When the downtrend was already starting, if one sell signal means the bears are in control, a second sell signal means the bears are in control. And now we can go to our analysis of what did it do here at the 50. It bounced off the 50 the first time. This time it didn't. And what told us that there was more force to the downside? Look at our bearish double doji. Look at our bearish double doji. What could be the target? Right down here, first of all, and then possibly all the way back down here. How much juice do we have left in our stochastics? Probably enough to, there's a wee little teeny gap right there. Do you operate with a dual time frame? Not necessarily. If I'm trading stocks, when is it time to go to another chart? When you've moved too far away from the T-line, then you flip to your 10-minute chart. What are probabilities for a reversal with a red candle bullish engulfing signal in the oversold condition? Less, Jim. Just simple logic from the Japanese rice traders say, if you see a candlestick sell signal in the overbought condition, that means something. If you see a candlestick sell signal in the oversold area, that doesn't mean anything. That's just a trading day. Conversely, if you see a candlestick buy signal in the overbought area, that doesn't really mean anything. As a matter of fact, most of the time it tells you to start looking for a sell signal because you're probably looking at a last gasp buying. Where do we want to see a buy signal? In the oversold condition. You operate with two nurses, all right. So this is just common sense. If we see sell signals and we see that it's not supporting at 50s or 200s, that means there's more downside. So a lot of times you're going to see big breakouts at the 50-day or the 200-day. And that's where you make your big money, because if we can identify when a breakout is about to occur or ready to occur, that gets us in early before everybody else. So we've got that session coming up this Saturday. It's the mini spotlight. It's a whopping $27. So this is just to give people a taste of how effective candlestick signals are for telling you when a breakout's about ready to occur. So how do you use the 34? Just like anything else. Do I have it on here? There's the 34. I've got other charts that will show you. We're going to go live here in a second. The 34 works effectively. This is the benefit of candlestick signals. Everything you put on your chart after the candlestick signals themselves is confirmation. So I could take everything off of here. Yes, this weekend is recorded. Yeah, it's a, here's the link for the weekend. It's, I could take everything off of here except the candlestick chart itself, and I'd trade effectively. I trade much more effectively with the T line. Then anything else you add should just kind of enhance your ability to see what's actually going on in investor sentiment. Let's see, was this it? Yeah, so there's $27 for getting much more than you. Carol, yes. Yeah, if you pay the $27, you're going to get shipped the, whether you are there or not, you'll get the copy of the session. All right, so that's basically how you improve your probabilities using candlestick signals and the moving averages. So with that, let's take a gander here. I'm hoping that I got most of that in the, is that centered right, Rick? Looks like we got most of it. All right, so here's today's trading on the Dow. Whoops, now I've got to, come on, grab this, there we go. Link doesn't work. You may have to copy and paste it. Try that one. All right, so here's the information that you should probably kind of start getting settled into your mind. We had a bearish signal in the Dow with stochastics heading lower, and today the market came out of the chute like a gangbuster. But this is why I always tell people be a little bit cautious, because if this is going to negate that signal, we definitely needed to see it close near the high end of the trading range, which obviously it didn't do. Why? Because this was already telling us that the sellers are starting to take control. Now, on the other hand, the NASDAQ continued to trade higher ever since this little J-hook pattern, and look where this J-hook pattern occurred. Right smack dab off the 50-day moving average. So as soon as we see this, we should have been very confident that the bulls were still in control, because number one, they did a buy signal, a J-hook pattern, a Morningstar type signal off the 50, back up through the T line. The J-hook pattern implied there was going to be more upside. So how do we make our analysis on the market trend if the Dow is trading lower and the NASDAQ is trading higher? Oh, is that the yeah, did my link that I put in there, did that not get you to the Saturday? I think this is it. Can somebody else try this link to see if it should take us to that $27 day? It looks like it's for 6/12/21. All right, so what do you think about a 3-day chart to confirm the 1-day pattern? If that works, use it. The nice thing about candlestick charts are that it is the actual information that is telling you what's going on in investor sentiment. Whatever you want to do to confirm it, go ahead and use it. Chart not displaying well. What is this chart? All right. It said the page you're looking for no longer exists. Perhaps you can return back to the home page and see if you can find what you are looking for. Or that doesn't make any sense. Does not work, works, nope. Well, for crying out loud. Or does it have to? All right, maybe it needs to have the backslash. All right. Yeah, that's Val. That was the one that. Yeah, that's for the 2 weeks from now. What we're going to be doing on this mini session is showing people the effectiveness of what to expect coming in from candlestick breakout situations. So that's going to be things that are just kind of illustrating how to use some of that information to be in the right trades at the right time. But then we're going to go even deeper into that analysis or those setups. On the 26th, that's going to be a 4-hour session. That's kind of dissecting what to be looking for to get ready for that breakout, number one, what to do with that breakout when it occurs, and what should happen after that breakout occurs to stay in versus getting right back out of the trade. What to consider, okay, yes. So if we know that the NASDAQ and the S&P are trading higher and the Dow is trading lower, what assumption can we make? The first assumption is that the market is not changing direction. It's still in a slow, sluggish uptrend. It also tells us there's some sectors that are acting very well, and there's other sectors that are selling off. And since the market doesn't seem to be very convincing, just a slow, indecisive uptrend, this makes logic say, well, maybe I should have some short positions on as well as long positions. Which, fortunately, with candlestick scanning, you're going to be able to find the good short positions that are going to work, and you're also going to be in good long positions that have high probabilities of working. All right, so let me go through, because I just wrote down a bunch of stuff here. There's kind of your cradle pattern on HOLX. Now, the reason I brought this one up is anytime I can see a pattern that tells us there's a lot better probabilities there's a reversal, I want to go after that. When you see, remember what one doji represents, indecision. What does a whole series of dojis represent? Bigger indecision. What do we expect after a series of indecision and then it tells us which way they want to go? Usually it's a very strong price move. We did that same analysis here on AVIR. After that series of dojis, this is what we expect, a strong price move. So as we go through a lot of our trainings, there's about, well, you know there's 12 major signals, 6 longs and 6 shorts. That's your bread and butter. That's what everybody should learn right from the get-go. That's the information that tells you right now what's going on in investor sentiment. Then you have the patterns. which is just logic that prices move in patterns because human nature works the same way time after time. On top of that, you have what we call the top rank signals and patterns. That's the combination of signals and patterns, like the doji gap up, your best friend, or the kicker signal, or the bobble breakout, things that you can put multiple days into analysis and dramatically improve the probabilities of being in the right trade at the right time. But the feedback usually is, well, shoot, trying to learn all this is overwhelming. That's why we tell people pick out 3 or 4. And you'll hear those 3 or 4 quite often, whether you're in the chat room or in these sessions, that you might do the best friend, the kicker signal, the left-right combo, the bobble breakout, the fry pan bottom breakout. You might pick out 4 or 5, 3 or 4, and I tell people learn them very well. Know when to buy and when to be back out of a trade and when to continue to hold. When you learn a pattern or signal setup extremely well, now you're in control of your own investing, because investor sentiment will work the same way time after time. All you're doing is learning to analyze what that same information is telling you time after time. So that was a long dissertation to say, when I see a series of dojis in a cradle type pattern, I know the probabilities are that next move is going to be extremely good. If I see a fry pan bottom setup, make this one a little bit smaller. I've learned to figure out where is the breakout. Well, obviously the breakout's right about there. And what do we want to see at the breakout? A good strong price move. What are our probabilities after? Whoops! No wonder people are not asking questions. LAC, yes, we do have training sessions in the members area for scanning, and we can do a scanning night sometime soon again. John, hold on. So let me get through the ones that I want to illustrate, and then we can do. All the charts right now are showing daily time frames. And that's, I'm a swing trader, so my trades are going to last anywhere from 2 to 10 trading days. If I was a day trader or a scalper, my first analysis is which way is this going, and then I want to be trading in that direction. Cannot see the whole chart. All right, hold on for a second. Let me do this just to. All right, that's why. Let's see if that works better. Eric, the left-right combo, the kicker signal, the fry pan bottom breakout, and the J-hook pattern, which includes the bobble. So what do I know about this right here? Stochastics not in the oversold area, but where do we know that a fry pan bottom breakout is going to occur? When the stochastics are usually in the overbought area. Blue, big fry pan bottom. Where is it about ready to break out? Right about in there. So if this opens positive, what's it tell you? Oh boy, can somebody type those in the chat? So this becomes a high probability trade setup. anytime we see that breakout after investor sentiment buildup, tells us the probabilities are pretty strong that we're heading in that direction. Let's see, I'm getting these out of the way because I found these earlier. So here's observe the obvious. Look, let make this bigger. Kind of a double bottom, fry pan bottom, and you're doing a doji right smack dab on the 50. What do we know about this setup? We know the doji rule, that if it opens positive, it's going to trade positive. And if it trades positive, what's the likely move? The same as this. So it becomes a good, powerful trade if it opens positive, and it's telling us we've got a fry pan bottom breakout. That's just 2 plus 2 put into analysis. So we saw the NASDAQ. Do a J-hook pattern right on the 50. We saw a doji sandwich on this chart, CEIX. Breakout right through the 50, starting your uptrend. Still like this chart because look what it's done. There's that little kind of rounding bottom J-hook pattern. And how did it break out today? With that doji sandwich telling us more than likely we're still in an uptrend. Here, I don't know if it's, I'll have to find out whether we start at 9:30. We usually like to do the small Saturdays at 10 to give the West Coast a little bit more time to sleep in. So we're also watching things like this. Look at the fry pan bottom setup, kind of backed off. This is eyes. Well, so what are we looking for now? If it comes back up through the 50, what do we got going on? There's our Bobble breakout J-hook pattern confirming your fry pan bottom. Again, 2 plus 2, just improving the probabilities, but it's moving in the right direction. So we recommended KPTI because look at your doji sandwich, rounding bottom, breaking through the 50, just implying that there's going to be a lot more upside. Why? Because the doji sandwich told us as soon as it opened positive on that day, they were going to trade a positive, the same magnitude as this. And what do we expect coming out of a doji sandwich? More upside. If we got more upside, what's that basically telling us? The 50 is not going to be acting as a resistance anymore. ET, look where it started, right smack dab off the 50 with a doji sandwich breakout. Now you're in your next phase. Wave 1, wave 2, little kicker type signal, starting your wave 3 of a J-hook pattern. So all this analysis is merely identifying what's going to create the high probability trade setups. You don't have to be a sophisticated technical analyst. All you have to do is recognize what the Japanese rice traders have illustrated as being buy setups. Smack dab off the 50, little gap up, breaking out through this level, starts your wave 3. Just a high probability setup. Amazon, as you can see, bounced right smack dab off the 200 with your best friend signal, your doji gap up. What happened when it got to the 50? It did a doji sandwich. What it tells us about the 50? The 50 is not acting as resistance. What's the implication? There's more upside. Should we look for retracement back to the 50 for support? Sergio, should we look for retracement back to the 50 for support? This is the 50. No, you should be looking for it to come back up through the 50 to produce a bobble breakout, fry pan bottom breakout. So not as support, you want to see it break through that area, which would be resistance from this direction. Apple, observe the obvious. They were having a hard time getting through the 50. They bounced up off the 200. However, look at what this signal was right here. What was this signal right here? No signal. So what would that imply? That implies it's not a strong reversal. So what should we be more prepared for? That as soon as it hit the first resistance level, we want to be a little bit more attentive to see whether it's going to go through. The fact that it hit the 50 and did a doji, what would that tell us about the uptrend of Apple? It's probably not there. You would have been back out of it, and probably right now not long or short. Let's see, we did LP. So we had been long PCT. There's your left-right combo. There's kind of your little bobble breakout, almost a T-line crunch. And then what happened when it got up here? There's your shooting star, almost a bearish engulfing signal, and a close right here on the T-line. Today it opened positive and traded lower. What can we assume about the 50-day moving average? They're not going through. The downtrend is likely now and back in progress. All right, so we had a bearish Harami. Let me make this a little bit smaller. On APPH, it was a good trade. We had there's your bullish Harami, best friend type signal. Doji Harami, gap up, Doji sandwich, uptrend, 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 didn't stop at the 50, didn't stop at the 200. Now it has a sell signal. And when it was selling off today, if you didn't get out of this on the confirmation of your bearish Harami, what would you expect was your first target? Coming back to the 200, which is what everybody's watching. Still no buying signal yet. Where's your next likely target? Back to the 50 that everybody's watching. So this is why the combination of the signals and the patterns give you a much higher degree of accuracy. There's your bobble breakout on. This is why we recommended BLI or BLI today. Came right up, failed at the 50. Pulled back to the T-line. There's your J-hook pattern. Broke out through this level. What was this level? If you took the 50 out, this was just a breakout of a J-hook pattern. The fact that you had the 50 there, you can see that that was what everybody else was watching. So if you didn't buy it today, what can you do with this one tomorrow? Well, if it opens positive after the doji, a doji sandwich, what's that telling you? Wave 1, wave 2, wave 3 is still in progress. Again, this is all just putting 2 plus 2 together, knowing what should happen based upon a signal, what should happen based upon a pattern, and what should happen that everybody else is watching. So it's up another 2%, all right. Oh, that's what I was doing. Went in the wrong direction. KOPN came up through the resistance level and pulled back. Where did you think it pulled back to? Right smack dab to the level that they broke out that had been acting as resistance. Now what do you do with this? Well, if they do a bullish Harami or a bullish engulfing, what's everybody witnessing? The fact that it supported right here on the 50. What's that tell us? You want to be buying because everybody's going to be excited that they could see that it was supported on the 50, they're buying again. On Billy, yeah, if it opens positive, you could be buying. So where's your next target? Now that they broke through here. First target would be this level. Second target could possibly all be way up to the 200-day moving average. LFMD, when it did the bearish Harami doji, if you were long, which I knew a lot of people are long, where was the logical place to put your stop? Right there at the low of the doji. Because of the doji rule. Number one, you're in the overbought area. Two, you've moved a little bit away from the T line. Three, we know if it came back or opened lower, the doji rule said it's time to take profits. Where do you think the first target was going to be? Right back here to the T line. If it doesn't hold here, where do you think the next target's going to be? They're going to come back and test to see if the 50 is going to act as support, which means you don't want to be long if you start seeing this do some more selling. Do Harami need confirmation the day after, or can you buy the Harami? No. The Harami is just a signal that tells you there's a possibility of a reversal. You need the confirmation. So why take the risk? If you're going to buy a bullish Harami, why not just pay a little bit higher for it, knowing that it's confirming doing what it's supposed to? That goes back to the fact that we're not trying to buy at the absolute bottom, and we're not trying to sell at the absolute top. We're trying to get that fat part in between. If you can get your correct trade ratio dramatically higher, the compounding effect to your profits will be tremendous, instead of trying to go out a little bit further and be a little bit more risky and buying a signal before it's confirmed. So Tigger, we were buying this one because of your best friend gap up through the 50. Now we closed out Tigger because of a spinning top, a doji, a bounce back up, but shooting star type thing, followed by a bearish engulfing. What's this all telling you in the overbought area? There's lots of indecision up here. It was time to close out that trade. But this was the buy when they did a best friend gap up through a level that everybody else was watching. Okay, let's see. Oh, mercy, I've got everybody past bedtime already. This is where you start watching to see what to do. Look where this broke out, right here at the 50 on a fry pan bottom. Is there a dollar or percentage distance above the T line that indicates far above, or just subjective? Just subjective. You're going to be able to see that the T line follows relatively close most of the time. But then where do the Japanese rice traders say most people buy? They buy exuberantly at the top. You'll start seeing it start moving away from the T line. It's usually doing it with either a gap up in the overbought area or large green candles. I don't even remember how far back Tesla was where it just started skyrocketing. And so when you see something start moving too far away from the T line, the next step you take, knowing that people buy exuberantly at the top, is you flip to your 10-minute chart. And if you start seeing candlestick sell signals and closes below the T line on your 10-minute chart, that's when you start taking profits. Why? Because the daily chart is telling you you're way too far away from the T line, and we know that the human nature will bring it back to the natural support level of the T line. Core, look at where this did the J-hook pattern breakout, right here at the 200-day moving average. CYTH. I don't know why I had this one on here. It had something to illustrate. I can't figure it out. Oh, no. I thought it was a breakout situation. For some reason, I got that one on here, and I don't remember why. This is the type of chart you're looking for. There's your fry pan bottom. There's your confirmation of the fry pan bottom breakout at the beginning of the pattern and at the 50-day moving average. Yes, so that shadow, even on a breakout, whether it's on that previous chart or this one, tells you there was profit taking. So what do we look for? If they open positive and start trading positive, that tells you the profit taking's over. The pattern is still working. Whose handwriting? So somebody was asking earlier, you use the 34. Yes, because the 34 is relatively successful or relatively relevant. You can see how the shooting star getting up here toward the overbought area just touched the 34 and went the other way. So as you can see, the chart my chart isn't really all that cluttered. Got the 200, the 50, the 34, the T line, and the little green line is the 3T line that works in conjunction with the T line. But the important aspect is, what are the signals doing? And then we can get further confirmation of where those signals are occurring. So halo is probably one you're going to see tomorrow. Observe the obvious. You have a type, cradle type pattern, and where was everybody buying? Right smack dab off the 200. What's that tell us about our probabilities? Stochastics coming up. That we're probably at least heading in this direction. Is it going to move up here, or here, or here? We don't know. We just know we're in the right direction. So once that trend starts moving, all we have to do is use our analysis of what signals we see on the way up, or where there might be a reversal signal. So PLL, one of the lithium mining companies, look where it's set up as a J-hook pattern. Came right smack dab down to the 34 and the 50, did a hammer type signal. What'd that pretty much tell you? Once they came up through the resistance level, they acted, they're used as support. Now you could be a buyer of this one. How do you scan for those stocks? I use a very simple scan, Kath. I have my trading universe, which are stocks greater than 5, trading more than 200,000 shares a day. And then I'll refresh it, and I'll just scan for the stocks that had the biggest percent price move today. And usually within the first 30 stocks, or either the first 50 stocks, which takes some, once you get accustomed to looking for good reversals, it takes maybe 2, maybe 3 minutes to go through up to 100 charts. And in that time frame, you're going to probably come up with 5, 10, 15, 20 good charts, and then you start cultivating through to see which ones are the best. So it's not a difficult scanning process. That's why you want to learn the signals and the patterns, so that eventually you will recognize them just by looking at them instantly. Doji rule says if the next day has a positive or negative open, that's the direction. But lately, markets have been shooting up in the morning and diving soon after. So a stock might be positive or negative on the open and the reversal after. How do you get around that? You don't. You don't. So today, this is why your analysis of the overall market tells you, all right, we're seeing a sell signal in the Dow, and it started shooting up, but stochastics were heading down. You already should know, wait a minute, there's sellers going on. This better stay up near the high end of the range today to negate this sell signal. Otherwise, that pressure is already there, and sure enough, it came back down. Not sure enough. That's why in the morning and afternoon comment, or especially the morning comment, said don't move too fast because these need to close near the high end of the range to stay long. So there are going to be times where you see something move up. Now, if you put in your mind that even though you might have the best trading strategy in the world, that if you can get 70% of your trades correct, you're going to make very good money. If you have a trading strategy, which I feel Candlestick is that strategy, where you can get 70% of your trades correct, the other side of that coin is you better know what to do with the 30% that don't work. Halo, take all or a percentage of profit if it hits the 50. I don't know. That's up to you. We won't know that until it gets there. For all we know, it gets up here and shoots right through the 50 to go to this level. So we can't make that assumption at this point. AFRM. What can we see setting up here? Well, there's your potential Bobble breakout. If this opens positive tomorrow, what's it telling you? The 50 is not acting as resistance. You've got a J-hook pattern Bobble breakout. How do you deal with a 100% move on? Let me re-ask that when we go to live charts. May 15th, Dow Jones had lots of tails to the upside. On May 15. May 15. Yeah, well, over here, near the end of May, you can see how you had a lot of indecision. And then once you had this indecision, you had kind of almost a kind of a sell signal. I can't see it well enough, but this was confirming the sell signal. The 4-hour training, no, will go into much more detail, much more analysis, and probably about 3 times the amount of signal pattern setups. Gay, are you asking if this is an inverted hammer? Where does an inverted hammer occur? I'll help you real quick. An inverted hammer occurs in the oversold condition at the bottom of a trend. That's an inverted hammer down here. This is, they tried to take it up and brought it back down. It's not a signal. It's just telling you there's weakness because your stochastics is still heading down. What is a Bobble breakout? Andrew, have you not been sitting here all night long? I'll try to find another Bobble breakout, but I think we've done it 3 or 4 times tonight. When you're looking for fast-moving stocks, do you look right at the market opens, or do you wait 5 or 10 minutes after the market opens to ensure it continues? Yeah, I don't jump in right away. If I see something that is moving big, I'd rather pay up for it knowing that it's still moving. So if I think something's moving big, or if somebody says, hey, look at XYZ, it's gapped up, I'll flip to the 10-minute chart. Oh, AFRM. All right. Andrew. A bobble breakout is a J-hook pattern that you can see defined by a resistance level that everybody else can see, like the 50-day moving average. So if this opened positive, you'd have a J-hook pattern. If you took the 50 out of here, it would be a J-hook pattern. The fact that you do have a 50 in here will be illustrating that everybody that's waiting to see whether they can get through the 50 or not will be buying, which enhances the J-hook pattern because it is at a major potential resistance level that's now been broken. So a bobble breakout is merely a J-hook pattern that has a resistance level that everybody can see. Oops, now I scrolled up. All right, did that clear it up for you, Andrew? All right, ARKG. That was more of a bobble breakout, yes, at the 200. Notice how it failed at the 200, pulled back, and now it's gone up through the 200. That's a bobble breakout, which if you took all these moving averages out of here, it's still a J-hook pattern. Okay, let's zip through the rest of these. First Solar, now that is not a bobble breakout because it didn't hit there, but it is a J-hook pattern. So where do you think First Solar is going to after this little gap up? Here's probably your first target, and there's your second target, fill in the gap. Exactly, yes. So it's a J-hook pattern with a observable resistance level. Now this is a good pattern in the sense, look at your doji sandwich that broke out through the 50. And kind of a little mini scoop pattern. But that doji sandwich implies there's going to be more upside, which tells you that you can be buying because it's broken out through this level and still heading higher. That is a, oh, I know I had that one on there. Now this is a bobble breakout setup. Notice how it came up, failed at the 200, pull right back to the T-line. Now if this opens positive tomorrow, if you didn't have the 200 there, it'd be a J-hook pattern. But the fact that you can see that that's where everybody else is watching to see if it's going to act as resistance, and it breaks through, now it becomes much more evident that that J-hook pattern is breaking out. Oops. Oh, Shazam. Kind of a little mini scoop on this one. Where's your potential targets? Back up here to the moving averages. INSM. Kind of doji, bullish confirmation. Look where it's come to. Came right up and filled that gap. That's the first target. Stochastics still heading up, so where's your next target? Up here. But this was the information that told us there was going to be a reversal upon that indecisive state, and then that's them telling us which way they were planning to go after that indecisive. That's a big fry pan bottom. And Jake, back to your question, it's already moved up, coming out of a fry pan bottom. But in this case, you couldn't really be buying this. It didn't become relevant until the breakout occurred right here at the 50. So that's a good looking chart also. And I think somebody pointed that out in the chat room today before the close. So using, and I'm kind of all going back to alluding to the price targets. Look how the failure of this one occurred right here on the 34 before gapping down. This is KC. That you might see on the recommended list. And look what happened here on Playboy. How long do you hold a fry pan bottom until you see a sell signal and a close below the T line? Now, look where it closed, right smack dab on the 50, which is also kind of a support level right in here. So what do we know about this signal? There's your bearish best friend. Lots of force to the downside. So if this opens lower tomorrow and starts trading lower, you can be shorting this because that tells you this is a failure. They're starting to take this one back down. When the bar closes a little bit below the T line, no, I usually wait until the end of the day. Remember what the most important factor for candlestick signals are: where they open and where they close. Now this, you're talking about Play or Playboy? This is Dave and Buster's is Play. Playboy is PLBY. Fuel cell, same scenario. How do you make a decision here? Look at your bearish left-right combo in the overbought area. They came up through the 50 and they gapped down today and closed right on the 50. So what's your decision-making process? The doji rule. If they open this lower tomorrow, you could be shorting it because it's going to move in the direction of how they open after a doji. How do you resolve a divergence between commodity and its producers, such as between USO? I don't know what you mean by that. Yeah. They're ETFs. Oh, the divergence between, yeah. Just because a commodity is moving in a certain direction doesn't necessarily mean the commodity stocks related to that sector is going to move the same way. They may have already moved in anticipation of that price move. Okay, a few more and then I'll take. So look where ATLR, no, not even close. ATER failed, right smack dab at the 50 with a doji. Now it's selling off. So what's your assumption, or what should be your assumption about this chart? You're in a downtrend. Where's your next likely target? Probably the bottom of this channel, down here someplace. Andrew, yeah, they may have already moved up in anticipation of crude oil prices going higher. Right now, crude oil is trading still in an uptrend above $70 a barrel. That's the July contract. But you've seen a lot of these stocks already have big moves over the last or a couple weeks ago. So there might be profit taking in here. So it doesn't necessarily always correlate. And Deere, you just stay short. Look at the dumpling top. That means they could be ready to bang this one down. Whoops. EGLX, look where this kicker signal failed. It closed right at the 34 and went the opposite direction. Lake closed right here at the, or opened at here, opened here at the 50 and did a hanging man signal. Pretty much told you that's where they were failing. And nail. Look where nail failed. So this is probably your blue ice failure. Look what started the downtrend. That shooting star doji best friend, where was the first target? Bounced up off the 50. Came back down through, came back up to see if the 50 was going to be breached. It failed. Where's your next likely target? Down here. So this is just a very simple way to analyze what the signals are telling you and where everybody expects the next price to move. Is there a way to guess target for a stock? Josh, that's kind of just what we just did. No. First of all, you look at everything that you might find as a price move. On this one, there isn't. Let's see. There's no trend. So what's your analysis of this? Well, you've got a little J-hook pattern. If this is wave 1, wave 3 should be up about here. But if you're long this, you just stay long until you see a sell signal. There you go. Chris is your worst friend. A blue ice failure, does it have to occur in about a 2, or could it, yeah, it's just something that tells you when they came back up fairly quickly, meaning within a week or 2, and failed at the level that was supposed to act as support before, now acts as resistance. Yeah, you just watch to see what all right. I thought it showed sell signals yesterday. Well, you did. So you had your stochastic still heading up. You had a bearish engulfing signal and a close right here on the 3T line. So what would have been your strategy today? If it opened lower, it was coming down to the T line, you could take profits and then see if it would start back up. The fact that it did a sell signal, if I was long and had stock in this yesterday, I probably would have closed out maybe half the position, because now you're up in the overbought area, you're getting extended. Take some profits and then see if the rest of it will run. Okay, I guess that's about all I've got for tonight. Are there any general questions on candlestick analysis? Oh, is that okay? That's the $27 session. Mish, hold on until I tell Rick to do the double line. Josh, same thing. Yep, it'll be it's recorded. All right, Rick, go ahead and do the double line. And in 3.8 seconds, do the next double line. Mish, I will start with you. CVS, if you're short, you stay short. However, you can see you're getting toward the oversold area, so you keep your safety stop above the T line. SKLZ, there was your bearish engulfing. So, Josh, this was just like your question on Dropbox. The Dropbox opened positive, went positive. This one opened lower. Where was your next likely target? Down here, the T line. So I would have closed out the position on a lower open today. Now you just watch to see whether it holds the T line or not. If it starts back up doing a J-hook pattern, you can always buy back in. Advanced Micro, this one's never been a good trader. There's really no trend to this stock. I would be someplace else. No, what happened here? If you, oh boy. If you're long, you can stay long. It just is not a very dynamic stock. Pin interest. Now there's your J-hook pattern bouncing off the 200. Look at your little bullish harami right there, confirmation off the 200. Now you have to watch to see whether they can get through the 50. RPD, you stay long, but observe where you are, right there. Which means if I was long, I'd have a safety stop at today's open. Because logic says if it comes down through there, they've failed at this level. ResMed, there's your J-hook pattern. So here's a simple observation. If that's your potential resistance level, and this is wave one, and you see the J-hook pattern setting up, and you know wave one's this big, wave three is more than likely going through this level. So that's where you stay long. Right now, I just stay long. ACB. That's a little bit toppy. Your dark cloud, your bounce back up. Now another bearish engulfing signal right at the same level. This one I'd get ready to close out if it started trading lower tomorrow. To stay long, you definitely need to see it open positive and trade positive. Is that a symbol? BMW. Nothing wildly exciting, but you did bounce off the 50. You do have a little doji. No, that wasn't a doji sandwich. It's not a dynamic chart. It's at least heading in the upward direction. It's not really a fry pan bottom. You usually would look for something bigger. But the fact that it bounced off the 50 at least keeps you in the right direction, but I'd use the T-line as a safety stop. Fix, that's a fry pan bottom with a nice breakout. That one you could be buying with the anticipation that at least there's your first target to fill this gap, and then the second target being the 200-day moving average. ASTC, another fry pan bottom right at the breakout level. Just make sure on a dollar stock you've got good hefty volume. And Chew, yeah, that wouldn't be the best thing to be buying. I mean, it's a slow, steady uptrend. It's not really resilient. John, I would say there's probably much better places right now to put your money. You could buy it on strength, but there's probably better places to put your money. VSTM, there was your breakout. There's your consolidation, and notice where the consolidation went to. right smack dab waiting for the T-line to catch up. Now you're in the next wave. Stay long on this one. Bingo, we closed out because after it traded lower yesterday and the market looking like it wasn't great, where's your likely target? They're kind of drifting back to test the T-line. So we're out of this. We'll just wait to see what it does once it gets back to the T-line. EOLS. That's your classic pattern setup. Fry pan bottom, J hook. If I was long, I'd stay long. If I was going to buy, I'd wait for it to come up through that level, telling me my J hook pattern is working. AVIR, you stay long on this one because of the kind of little fry pan bottom, double bottom, and that series of dojis. First target, second target, which would be filling this gap. Z10, let me see, let's get rid of those. That's not great. You've got a fry pan bottom, but it's not really enthusiastic. If you were long and this opened lower tomorrow, yes, close it out. There's better places. Dog Z, that's a breakout. What you want to do is you want to use our rare process, which is research analysis, reverse engineering. See what broke this out, and then if it starts trading positive tomorrow, telling you the profit taking's over, you can be buying, and then you put your safety stop right there. It shouldn't come back down through that level. CrowdStrike. So here's the simple assumption. If this is wave 1, wave 2, this is starting wave 3 of a J hook with the same magnitude as this, that means it's going through this level. You can still be a buyer of this one. Mavis was an example of the double dojis. Look at your double doji here, still confirming this fry pan bottom. Indecision up here, but no selling yet. So you stay long because you're still in this fry pan bottom trajectory, but I would probably use today's low as a stop, because if you got a lot of the indecision and you're in a fry pan bottom, the assumption is we should be going in this direction. If it came back down through there, this indecision up here was telling you there was a change a-coming. STEM, for some reason, it's not coming up very well on this chart unless it's a brand new symbol, but can't help you with that one. Beyond Meat. That one, there was your left-right combo, open lower, there's your target, or there's your target. Anytime I see a left-right combo, especially up in the overbought area, I'll close it out immediately, because the left-right combo is one of those power signals that gives you a lot of information that you don't really need confirmation that it's more than likely going to be reversing. Left-right combo, gap down, dumpling top. I would suspect they're heading for possibly all the way down here. How about Sava instead of STEM? So Sava we closed out a couple days ago because you had the big long-legged doji, a doji, bearish confirmation, and look where it came to, right smack dab on the T-line. Stochastics coming down. So now what you need to see is where do they open it? Are they doing a J-hook pattern, or is it still drifting lower? Oops, I didn't read far enough. No, they don't have to be in the oversold area. You can see the dumpling top. Just like a fry pan bottom is usually going to occur on the breakout when it's in the overbought area. A dumpling top breakdown is usually going to occur when it's in the oversold area. Zum, this one would have been closed out today because it didn't break out. So I would have closed it out. Worst case scenario is you could always buy it back if it comes up through that level. But that's kind of a nothing chart now. KGC, one of the gold stocks. Look how it's kind of supported off the 34. I wouldn't be a buyer of this yet. Probably wouldn't be a buyer of this until they break this downtrend. If you're long, boy, that would have been a toughie to stay long, especially with that. Okay, that one right now I wouldn't be long or short. There's too many other good charts to analyze. Workhorse, that one, you could see how it was getting indecisive up here. Long-legged doji, little shooting star. Doji, long-legged doji. This one I would have closed out, especially with it closing back below this level. You can see there's no force to the upside right now. So when you see something like that, I'm more inclined to close out the position, because if you can't really tell what it's doing, the whole point of candlestick analysis is being able to find charts that tell you with a high degree of probability of what they're doing. Clean energy, kind of the same scenario. This one should have been closed out because they tried to take it back up. Here's a very simple observation. If they're taking it back up and not doing a good signal, if they open it lower the next day, close it immediately, because that tells you the bulls did not win that battle. I think we did CVS. Stay short, use the T-line as your stop. Mara pretty much looks like Riot. You could be buying this one on positive trading, giving you a doji sandwich kind of J-hook pattern. Fubo, another simple observation. When you saw the doji in the overbought area, if it opened lower and traded lower, that told you they were probably coming back to test the T-line. Uh-oh. What is that? Left-right combo, following bullish Harame. Stochastics not yours, so none. Nah, that's just junky trading. I probably wouldn't pay attention to this one until they can break up through this level. But that's really not any great chart. Is that AL? That one you can go short, yes. Observe the obvious. The 50 is a resistance level. First target would be right here, which would get you fairly close to the 200-day moving average. This one I would be out of. Again, look at your indecision up here and a close below the T-line. That told you the sellers were in force. You could even be going short on this one if it opens lower tomorrow. That where they tried to take it up, the bulls tried to take it up, and then they open it lower, that tells you the bulls failed. You can short it. Sage, nothing wildly exciting. You got a downtrend. You're getting up toward the overbought area. You really need to see a breakout. Yeah, that to me is just not a very good looking trading chart. I would definitely be someplace else. ABBV, that's a observe the obvious again. Bouncing up off the 50 and now doing buy signals. Wave 1, wave 2, wave 3. Good chart. We recommended BLI because of the Bobble breakout. You can still buy this one on positive trading tomorrow. Oh. Another one you could stay long. Not anything real intriguing about the trend of this chart. If you like it, you stay long. Yeah. RC, that gets the rating. Well, shucks. I did that right. SDLC. That's not coming up. Space. Not good. I can't tell if that's a bearish engulfing. If they open this lower, they're bringing it back down to the 50. Or the T-line, I'm sorry. Facebook, all you can do with this is stay long. If it stays above the T-line, it's just not a good trader. But if you like it, make sure it just stays above the T-line. Riot, still long. You can still be buying this one on positive trading. Bingo, I think, lost its luster. I'm suspecting you're going to see it pull back and at least test the T-line. That's a good gap up. Your best friend, kind of a double bottom. You could be buying this one. It was for a buy. Yeah, your stochastics are telling you probably got some more downside. AMC got whacked. So here's that case where big move to the upside, away from the T-line. That's where if I was trading it, look how far away you are from the T-line. On the daily, I would have gone to the 10-minute chart. When they did the bearish harami the next day, that's an immediate clue that this is where the bulls and the bears were coming into contention. You could go short, but you got to be careful with these because they just whip them around. So if you go short, make sure you have a safety stop someplace that it shouldn't be trading. SDC. Look how it failed at the 200, came right back to the 50 and bounced. Sir, you could buy this on positive trading. Kind of a tough one to trade, but you could buy it on positive trading. AB&B. Look how it failed right here at the 34. I probably wouldn't be long or short this one. There's nothing to sink your teeth into on this one. Water. That one, if it opens lower, close it out. Look how far away you were from the T-line. This one, if it opens lower, close it out. Same scenario on Matador. High profit candlestick patterns is requiring needs. High profit candlestick pattern is and requiring needs. You got me there, Chris. ONDS, that may be supporting back here at the 50. At this point, I probably, if I was going to be a buyer, I'd wait for it to get back up above the T line. All right, do these real quick. Gold, still, whoops, that's the gold fund. Oh, that was a bullish candle. You stay long on gold. Kirkland, you could be buying this one. CDE, nice J-hook type pattern. Just be careful that you're at the top of this range. It needs to get through that level. GDX, that one you could be buying on positive trading. SPWR, that one you could be buying also, coming up through the 50. CRBP, kind of a double doji setup, yes. So if this opened positive tomorrow, that's pretty much telling you the Bobble breakout is still in progress. GHVI, that's getting a little bit testy. If you're long, you just stay long as it stays above the T line. Did you say we don't need confirmation? You don't need confirmation on the basis that most of the time that signal is so strong that if I see a left-right combo, I usually close it out right away because the probabilities are there is something happening. All right, Gerald, thank you. For day trading, at the chart the night before open, what's the best time frame to analyze to get the best pattern? Well, you're looking at a chart the night before with the expectation that if it confirms the direction of the chart pattern or the signal, that's probably the way you want to be trading it intraday during the day. Now, I trade futures like wheat, soybeans, cattle. So I would look at this chart and say, that looks like it's trading lower, that if I was day trading it tomorrow, I'd probably be day trading it on the short side. Yes, the 4-day training, I think Becky put in there. And don't worry, you'll have lots of opportunities to sign up. Oh, there it is again. Oh, that's the, yeah, that's for the 26th. Thank you, Becky. Okay. Kept everybody past their bedtime again. No, it's not on the T line. And where does an inverted hammer occur, DJ? You could buy this one on positive trading tomorrow. Yes, a Bobble breakout. Did you skip this one? I thought I typed it in. No, what's the question? There's really nothing magnanimous about this chart. I probably wouldn't pay attention to it until it breaks out through this level. That's not really a fry pan bottom. That's just trading. Okay. Watch the markets tomorrow. Again, the Dow with a sell signal and not confirming any buying today. You might be back into this divergent market where you got some sectors moving up, some sectors moving down, which is not a very concise analysis, but that's exactly what's probably happening. The Russell 2000 came right back to the key line, and the Qs were, no, they weren't sideways. The Qs still moving nicely again, the J-hook pattern. All right, everybody. We'll see you bright and early tomorrow morning. We'll see you.